People think about M&A when it's too late.
America is driven by small, medium business.
Most mergers and acquisitions are lower middle market.
Welcome back to Silicon Valley Insider. I'm your host, Keith Koo. Special guest today, my colleague at US Capital, Tejal Shah. Welcome, Tejal.
Thanks for having me, Keith.
Always great to see you. Why don't we just start from the basics? What is M&A?
M&A stands for mergers and acquisitions. Basically, when one company buys another or two companies combining. There's a couple different reasons of why we get to that point. Main one, buying revenue, but there are a lot of other things that can go on in that growth, right? Customers, a region, a market, new capabilities that are faster for one company or another to get to that next stage. And then the one that we're a lot familiar with here in Silicon Valley, like an acquihire, a team and a technology sort of acquisition.
And I think that's where a lot of opportunity people don't realize is even there. What is the life cycle of an M&A in the middle market?
It's something you have to think about in the beginning so you can position yourself later down the road. And people are having these conversations way too late when something's happening versus having a strategy as that if that comes up, the opportunity arises, they're ready for that. The life cycle is start a business, and we won't go into all of that today. And you've been growing, and there are a couple of, you've been running the business for a really, really long time, and you want to see a succession plan of some sort. It's also a perceived value. It's not what you think, it's what someone's gonna buy. So also making sure you're not putting yourself in a situation where your metrics are tracking down, and then you want this high valuation, or you want someone to acquire you for a lot of money, and the metrics don't quite line up. But a lot of times you want to exit in an M&A capacity. You'll start talking to folks like us, investment bankers or corporate development people. And what you're doing is you're aligning, making sure that, it's aligned from a strategy perspective. They're doing their due diligence. You're also doing the same. Then there's negotiations involved, and then, there's some sort of transaction.
I think also the point to make is that oftentimes if you have the luxury of what I usually encourage people to do is to kind of step outside yourself and look at things objectively, you should be intentional about if M&A is one of your exit strategies.
Yeah, that's a great point, because here in Silicon Valley, like if you go down the VC model, like the only thing they want to hear is IPO, all the decacorn or whatever sort of talk. I always tell early stage founders that are raising money to definitely think about other alternatives. But if you're pitching, you don't necessarily need to come up with that, but you should be always keeping that option open and really thinking about that. It should always be part of any founder, any owner's strategy, because while I know here in the Silicon Valley, especially if you're pitching to venture capitalists, they want to hear the IPO exit. They don't ever want to hear about, an M&A, but that's really the exception, not the rule, as we talked about earlier. So having a strategy in play early on is better suited for any founder, any owner to have that in mind. And again, back when opportunities arise, you're ready to jump on that if you've had a well thought out plan.
What do you think are some deal killers? Just a few things that really are non-starters for a deal to get done.
Oh, just one. I mean, the basic one is just people coming from perceptions of how they're valued. Valuation, that we can talk about that another time, but valuation seems to be a big just non-starter, because the buyer and the seller have very different even platforms to start on. So there's not even we're not even close to getting even to a negotiation. It's too out of sync. So I think, just being a really informed owner and founder helps your case. Bigger corporations have access to just a lot more. So they definitely have the upper hand in terms of what they're looking for and what they're acquiring.
And my addition to what we're talking about is, of course, the integration part of it. So once you get the deal locked down, if you want to make sure that it is successful, I encourage you to have a very strong M&A integration strategy that involves culture, systems, people. And then once you have that, if those things are tight, then you have a much better chance of a successful integration. So once again, Keith Koo, Silicon Valley Insider, joined with my colleague Tejal Shah. If you have any questions or comments, you can email us at info@svn.biz, and we'll see you on the next one.